Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com, a leading CFD brokerage. And be sure to visit the website www.cfds.com to certainly learn more about the products and services on offer. Alternatively, you can visit the educational site, which is www.cfds.education, to obviously have access to the latest charts, analysis, and markets, etc. Okay, a super Thursday has obviously come and gone almost now in terms of the markets. Now let's see if we can recap in terms of the movements overnight. Okay, so the US market certainly found weakness going into the session yesterday, given the fact that we had Fed Yellen basically sounding very hawkish and certainly triggering concerns with regards to a potential rate hike, etc. And a risk-off obviously mode ensued. Now that obviously was carried into the Asian session, but the Asian session certainly put a stellar, I wouldn't say a stellar rally, but certainly put up some resistance. The Shanghai up by 1.87%. The Hang Seng was actually negative. We did actually start to sell off towards the close, and the Nikkei finished up 1%. So certainly a swing in the bias and a shift in the bias in terms of sentiment. But then that was knocked on its head as well, given the fact that we had German data weaker than expected, weaker EU data, weaker Russian data. Volkswagen obviously downgraded overnight, so that was a concern. The euro into support. Morrison's down, Cobham down, Thomas Cook. The Russian terrorism concerns with regards to the jet over Sharm el Sheikh, or en route to Sharm el Sheikh. Basically, all the flights cancelled, and that sent TUI and obviously Thomas Cook down 5%. European car sales and car registration numbers in the UK certainly down, and European car sales down as well. And we had several other obviously reasons for being bearish, but the main reason or main concern was the fact that the Fed was obviously now in the hawkish mode, and increases or percentage of the possibility of a rate hike in December has now increased to almost 60%, I think, if I last checked, or 55%. So certainly a risk-off tone overall. And given the fact that I put in a potential reversal scenario for US indices, a potential risk-off going into the US session. Okay, so I've explained the fundamentals, and the overriding fact is the fact that, like I explained, with regards to Volkswagen, having the downgrade, Euro USD is into support, which I explained in my charts yesterday. You are obviously putting in a potential base here now on the euro, and you can see that given the fact that Mr. Carney reduces inflation expectations, that certainly helped the euro bid higher as well. So that certainly is another factor in helping the euro propel higher and causing a risk-off scenario in the markets. So that's something that we certainly need to take into consideration as well. Now, basically the BOE certainly has thrown a curveball this morning. If I just explain the FTSE 100's perspective first of all, if I go to the 10-minute chart of the FTSE itself and explain, you can see that we obviously sold off initially. Now this is where I was actually stopped out. I did manage to get a plus 10 on the reversal, but I didn't catch any more on that reversal. But having said that, basically what occurred was that the fact that I overlooked this morning on my long trade, given the fact that Asian markets were higher overnight, and given the fact that obviously China was obviously higher as well, and given the fact that we had positive news from AstraZeneca, Shanghai was up, Alstom up, Credit Agricole up, Adidas up, Zurich up, Randgold, and obviously BOE cutting CPI was certainly going to help the FTSE propel higher on this dovish talk. And that obviously did occur eventually once we've closed the gap at 6370 region, and as you can see there, quite an impressive thrust higher on the FTSE 100 itself. Okay, now at present, basically we are obviously holding this double bottom support at 6372, and we'll see exactly how the market transpires thereafter. But remember, the euro strength will certainly hurt European equities, and the US equities already are putting in a potential top. So the FTSE itself, as you can see, we went low to 6375 based on Thomas Cook, and that was obviously something that I overlooked. And terrorism concerns, etc. We ignored the Chinese data. We ignored Chinese news overnight, and China markets higher overnight. We ignored that, and the markets obviously started to reverse. Now you can see the markets have pushed higher based on the BOE. Basically cutting their inflation forecasts, and initially the markets rallied on the expectations that Mr. Carney was overtly, or the BOE were overtly dovish, given the fact that we only had one dissenter, and that was Mr. McCafferty, and Ms. Forbes did not. But Mr. Carney's obviously press conference thereafter thus far has certainly been hawkish, or not as dovish as everybody expected, and that's why you're seeing the FTSE 100 come off the highs. Okay, so again, this is an interesting scenario that's occurring at present. So all eyes on the FTSE 100. The weekly chart, I've already explained, you are into key resistance. We are still holding that key diagonal trend line and remaining below the key neckline of the HNS formation. The daily chart, you have this symmetrical wedge formation now, so bear that in mind. Remember yesterday's pivot top, that certainly should hold, is expected to hold, and this basically we have a symmetrical wedge formation where this FTSE could certainly break either way. Again, it's all about how you interpret the actual BOE. If I just bring up a chart of sterling, just to show you, let's just find that chart now. Bear with me, I don't have a chart here. Okay, 1 second, let me just get this added. Sterling will be very important here, as it will basically be a barometer to just basically assess dovishness or hawkishness. Now, you can see the daily chart now of the chart of sterling is certainly coming into some support zone, or certainly is coming into potential support itself, and this is certainly a barometer that the market certainly has factored in all the dovish rhetoric from from the BOE, given the fact that obviously interest rates were kept, and obviously we only had one dissenter as opposed to two. So there are support zones that we are approaching now in terms of the FTSE itself, and therefore, given the fact that we've obviously factored in all the dovish talk, and Mr. Carney is not as dovish as everybody expected, then therefore one would expect or presume a reversal at this juncture. Okay, and that obviously is negative for the FTSE 100, so bear that in mind. Okay, now going back to the FTSE itself, you can see here we've obviously thrusted higher. This is your BOE dovish green candle. We've gone back to neutrality now. Now neutrality is where the market opened up in the morning, okay, given the fact that we had concerns over Thomas Cook, etc. So they will certainly continue to weigh. Okay, AstraZeneca failed to propel the FTSE higher as well, so again, that's certainly something else to take into consideration as well when trading. Okay, so and also given the fact that China was obviously higher overnight, and that failed to propel the FTSE higher as well. We sold off immediately. Maybe one could attribute it to fears or uncertainty regarding the BOE, but given the fact that Thomas Cook was down, car registrations were down, weaker German data as well, and obviously Volkswagen downgraded, copper is making a new low as I talk, and therefore one could attribute a lot of bearish variables as well. Okay, now the question is on the 60-minute chart is whether or not this bull flag plays out. Given the fact that Mr. Carney is not as hawkish as everybody expected, and given the fact that Bank of England's Carney fact we are not at zero low around weekend's argument for not raising rates. The fact that we are not at zero lower bound weakens argument for not raising rates. So basically it's sounding very, very hawkish again. Bank of England's Carney fact we are not at zero lower bound weakens argument for not raising rates. Okay, so he's obviously trying to talk the markets into obviously or psychologically accept a rate hike. That's basically what he's trying to do. Okay, BOE didn't discuss policy easing at November meeting, so BOE hike estimates in the wake of QER. MPC isn't concerned by loss of credibility, so he's also acknowledging that as well. Okay, so interesting scenario here at present. Okay, so bear with me 1 second. Okay, so this is basically what we're expecting at present. Okay, so again, it's all about this 60-minute candle on the FTSE 100. We do have an unfilled gap above, so it will be a test as to whether or not we can obviously close that gap, and a lot of that will depend on US markets and how they trade. Okay, now the rest of the markets, so look at the German DAX itself. German DAX is an inside bars to yesterday's price action, so that's basically where we stand. The 60-minute chart on the German DAX is a double top, so horizontal resistance or triple top resistance is what we're expected to hold. 10-minute chart itself is finding resistance now, back into that zone. Given the fact that we sold off quite substantially based on Volkswagen concerns, etc., etc., you had weaker German data as well. Obviously, the Euro USD now into support. Okay, you can see this clearly on the Euro USD chart. If I bring up the daily chart of the Euro USD, you can see that we are holding support. So one would presume from that the euro is now going to rise, and therefore that is going to create a risk-off scenario for European equities. Given the fact that US equities, I've already explained, are making a potential top. If I bring up the S&P 500, you can see that you have a HNS formation on the 60-minute chart after breaking out the rising contracting wedge pattern. If I bring up the daily chart of the S&P, you can see you have a rising contracting wedge and the daily chart is obviously holding resistance here at 21.14 and has failed to propel higher, and therefore that's the reason why I was obviously initially, my bias overnight, as you can explain, is bearish on the FTSE 100. Okay, and that's why I was very perplexed and very confused as to the rally this morning on the European equities, especially the German DAX. As you can see here on the 10-minute chart, that was one hell of a reversal. I mean, that's a V-shaped rally from 10,780 up to 10,960, almost a 200-point swing. Very, very impressive. Okay, so that's basically European indices for you at present. It's all about the QE trade. Everybody wants to buy in the dip. Okay, so the 60-minute chart on the German DAX, you can see there we are obviously holding this key diagonal trend line. We bounced off it. Okay, and the daily chart, you already know, is an inside bar. Given the fact that copper is still making new lows, oil is still languishing at the lows, it's very hard to envisage any rally in the markets at present. Okay, right. In terms of the French CAC now, should we say the Euro stocks now, you can see here Euro stocks on the daily chart, you're at the 200 MA, that's basically where we are. We have taken out yesterday's bearish candle, which is very impressive. Now, obviously, one of the reasons why the German DAX hasn't is due to the fact that it's obviously has Volkswagen within its midst. Now, even though we did have stronger earnings from Adidas, that's probably one of the reasons why one could attribute the V-shaped rally. But nevertheless, you have a double top on the Euro stocks on the 60-minute chart, so therefore you are expecting resistance. Rising, contracting wedge pattern, obviously we've broken down now, and you are looking at potential support at 34.60, if not then 34.50 on the downside on Euro stocks. Okay. Now the S&P 350, again, you can see that we are clearly, that topping tail yesterday has certainly held, and therefore you are expecting weakness. The 60-minute chart certainly pushed higher, but you are looking at weakness thereafter still. Okay, and given the fact that the euro is certainly rallying, that's obviously not helping either. Now the French CAC in itself, 10-minute, you certainly have taken out the yesterday's high, so very, very impressive. You can see that we've obviously pushed higher here on the French CAC, given the fact that we did have stronger French data today. The 10-minute chart certainly seems to be exhausted at this juncture, so we shall certainly keep monitoring the situation. But the 60-minute chart certainly is showing some promise on the French CAC itself. Whether or not, like I said, whether or not we can sustain this move, given the fact that the euro is into support, is a different question altogether. And the euro at present is currently moving higher quite considerably, so certainly keep an eye on that at present. Okay, understood. So rising, we have this rising bullish channel, so again, or certainly keep an observation on there going forward. But the fact that the CAC has certainly put in a new high is very, very impressive, especially given the fact that we have Volkswagen concerns, etc. And that's something that we need to certainly observe very carefully. Okay, I think that is a wrap in terms of European indices. All eyes will be on Volkswagen. That's the main concern. Obviously, the Fed being hawkish, and US markets will now dictate the next move. Again, the argument that the euro is into support certainly does strengthen the case that European equities will or are looking to potentially reverse at this juncture. Okay, so be sure to visit cfds.com for your trading needs, and goodbye and safe trading.